following is an excerpt from an askSlim premium level video. Follow us on YouTube, give us a thumbs up if you like this video, and do subscribe to this channel on YouTube. Share it. There's tons that come out every single week. Follow us on Twitter at askSlim, and write to Matt at askSlim.com for trial memberships. We have trial memberships available for all of our levels, 1, 2, 3, and 4. And go to the askSlim.com website for details. Thank you, and enjoy the video. So now we'll talk about the stock market. Here we go as we look at these patterns. I want to just take a look here for those of you that are new. There's a lot of people coming and seeing us for the first time. What I want to do is I want to go back over here and let you see these cycles as the market was moving up. And you can see the rhythms in here as the rallies and the sell-offs were swamped. In other words, the power of this upward momentum was so strong that it continued to move up. This was a 21 days to this low, 22 days to this low, 20 days to this low, up the slim ribbon, up the slim ribbon. You don't have the slim ribbon? Well, certainly you should get it. You can get it right on our website too. For the Thinkorswim platform. So you see all this powerhouse as it just kept riding that momentum up. Then we had this tiny little shift that went on as this ended in 16 days instead of 20. You see this was 20, this was 20, this was 16 because of the huge selling capitulation. Look what happened here. After the slim ribbon turned down right here, it gave you the breakdown under that cycle low, the momentum negative. The S&Ps collapsed from that point to 1,000 points on the downside. After that, as the slim ribbon continued to warn you, the combination of the slim ribbon projection oscillator giving you a sell here, a sell here, a sell here, actually in that sell zone. So what are we looking for? If you don't understand that cycle analysis I just told you, you don't believe in these rhythms of money in and out and what it all means, well, I don't know how to tell you any more about the importance of that other than sending you to our informational page on our cycle analysis workshop. And that will help you a lot in understanding it. And they'll give you a description of our 20 video modules. 30% off on that right now while people are stuck at home. We really want to allow people to have an opportunity to use this time productively. So do take our workshop. Write Matt at askSlim.com for 30% off on the workshop. All right, so here's what we're looking at right here. This was the range that we were looking at, that we talked about. Gets up near the top of the middle right there. We said 2660. We thought it could come down here to 2470, down here to 2360, and you can see it's doing that. And when you look at the projection in here, it says that, well, you may get some rebounding and some moving in here, but then you're probably going to move down to this area of about 2360 sometime in the next week and a half. The sum of the evidence to me is that we're going to be in a range. In other words, the intermediate patterns have looking like they've bottomed. We said that last week, and we were in a temporary period of several weeks that we would see a rally and then significantly lower again. This is that range that we're looking at right here. And if you look at the cyclical patterns that you see here, it's suggestive of that range existing here all the way out into May. So we could be in a pretty wide chop in like 300 points plus in here, not getting anywhere near that low, not getting above this top of this resistance area all the way out till May, until all of a sudden we're facing the realities of how much longer this is going to take and how broken our economy is. And then the market starts to collapse again. It's already moving down again right now, but you could see as we're having this down day, and we had this down day here on Wednesday, it's really only into the center of these areas. This is not anything that's significantly negative in here. If there's anything that is, it's still in this negative momentum, and it's severe negative momentum in the intermediate. So the risk rewards are always going to be to the downside under these conditions in the midst of a time period where we're looking for a range. So range chop is what we're looking for, range chop, and then big down. So the next week or week to 3 weeks looks to us like chop around, get down to under 2,400, try to move up again to 2,700, and then be in